to this computer. Okay. So learning objective number 4, post transactions to the general ledger. So what is the general ledger? General ledger contains all these accounts, right? So you have seen that accounting equation, there are different accounts. General ledger will contain all these accounts: assets, liabilities, shareholder equities, dividend declared, revenue, and expenses. Okay? So you would have a list of all these accounts: cash, equipment, revenue, salary, expenses, right? This is called a chart of accounts. So this chart of accounts have all the accounts descriptions, right? Sometimes, not sometimes, you always label a number, assign a number to each account. It's easier to identify. So for cash, it's often 1001. That's for the cash account, right? It could be any numbers. It's up to the company. But when I'm doing my own business, often the 1000 level numbers would be for assets, right? 2000 level numbers will be for liabilities. Okay. Posting is the process. Did I record? Yes, I did. Posting is the process of transferring the journal entries from the general ledger, okay, to the general journal to the general ledger account. Okay. So this is the picture of what we are talking about, the 4 steps, right? So first, this is one example. We have a transaction. This transaction happened on October 1st. They invested $10,000 cash in this company in exchange for $10,000 common shares. Okay. Okay, sorry. They issued $10,000 common shares. Okay. And this company received $10,000 cash. So now we have some analysis here. So how does this transaction affect my financial position? So this transaction will increase my cash by 10,000 and also increase the shareholder equity, the common shares, by 10,000, right? So my equation analysis will be, well, my left side of the accounting equation, the I side increased by 10,000. My right side of the accounting equation, shareholders' equity, common shares, increased by 10,000. So my equation, they increase for the same amount. So the equation is still balanced, right? So if you have a balance, when you put the same weight on both sides, right, that balance is still balanced, right? And then because I side has a normal debit balance, so I need to increase my cash. I'm going to debit cash 10,000. Because shareholder equity is equity account, has normal credit balance. So to increase this account, I need to credit my common share for 10,000. So this is the journal entry. October 1st, I debit cash, credit common shares for the same amount, $10,000. My equation is still balanced. Okay. So that's my journal entry. And note that the way how that this setup is like the debit line, the cash and 10,000 versus the line of the credit line, common shares, they are indented a little bit, right? So that's a way to show you better, right? So that way to show you better which is debit, which is credit, okay? And also they include an explanation, issued common shares, right? So that would be a generalizing, okay, to your general journal. Date, explanations, debit your account, credit your account, and that balance, that amount. And now you're going to post this journal entry to the ledger. So under the general ledger, you have a cash account, T account. You also have a common shares T account. So when you debit something, you put onto the left side of the T account. if you credit something, you put it to the right side of the account.